with relative outperformance by the broader markets. Consumer healthcare stocks lead while utilities were the laggards today.
Reports suggest the Defence Ministry will meet today to discuss proposals of mega projects worth around 1.2 trillion rupees for approval. Defence and shipbuilding stocks gain on expectations of new order flows from the government.
Potential relief for Infosys on the 30,000 crore rupee GST notice. Sources say the council is likely to clarify on the tax demand. FMCG companies could also get some relief on the tax imposed on snacks. That is a CNBC TV 18 exclusive. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need as you look forward to another trading session. Today was absolutely flat if you're looking at the Nifty. I'm Prashant, with me, my colleague Bandyopadhyay. Sudip, hi.
Hi, Prashant. Well, interesting session. I mean, very range-bound at the index level, but there was so much going on with respect to stocks, right? So, all in all, and then we had the big flurry on the bank index as well by the end of it. So, plenty of action and excitement.
Plenty of action and excitement.
Stock-specific level, yeah, maybe.
But you know, you essentially had the broader market, which made up in a way for what was not happening as far as the Nifty is concerned. So I'll just sort of put out a few points. The Nifty flat close. 100-point range from the high to the low, we crossed the 25,300 level. 25,230 or so was the sort of downside, the low of the day. Only once it looked like the market was going anyway, but that also fizzled out fast. Bank Nifty had a bit of a rally starting, I think, at about 220, 230 or so. There was a sharp move. So Nifty Bank is nowhere close to making a new high, as like the Nifty already has some time back. Is this the move which will last? That's the question. So the Nifty Bank taking out the 50% retracement conclusively. And now, of course, you're looking at the sort of 61.8% retracement. And above that, if you're able to get there, you're essentially looking at new all-time highs, taking out the previous highs, etc. It's been sluggish, very unclear kind of journey path for the Nifty Bank. Mid-caps and small caps, much better. The mid-cap index fizzled out. It was only the small-cap index by close, and that happened in the last hour. The small-cap index ending about 0.4% higher. Sectorally, some up, some down. But really, it's about individual names, which we'll get to in just a bit. Sudip.
Oh, absolutely. And in terms of that sectoral spread, I guess there was a fair amount of defensive bias to the kind of buying that we saw today. And that showed up in the form of a lot of consumer names. If you look at the Nifty tally, plenty of consumer stocks, both on the FMCG side and the discretionary consumption side, they did well. There were some hints of pharma as well, which were up and about. The downside came in from a lot of the commodity plays, whether it's oil and gas or metals or, stocks like Coal India. So commodity is not that great. Consumers doing better. But the highlight really has to be the financial universe in the market and all kinds of financial stocks, banks, non-banks. By the end of it, they were all flying higher. And today was also the Nifty Financial Services weekly expiry. So there was a trading element to it. But even, as I said, even the banks, some of them, did fairly well. And the Bank Nifty was actually the best performer, better than the Nifty, better than the mid-cap index. It was the Nifty Bank that took away the top honors today. So we'll tell you more about all the action as we go along. Here's the lineup on the show. We'll start off, of course, with the key stock movers. Vivek will bring us all the granular action. And then we talk about the defense sector today. That was in sharp focus because of this anticipated high-level meeting. Now, the stocks that were buzzing around included names like Aadhar, Housing Finance, as well as GMR Power. We'll tell you why these stocks were in focus today. And then, of course, we get into all the key events to watch out for tomorrow's trading session. But first, the stock movers. Over to Vivek for that. Vivek, hi, good afternoon.
Well, good afternoon. Another session where I actually saw the breadth as far as the broader end of the market is doing quite well. In fact, the broader end of the market actually outperformed the benchmark indices. Interesting list of stocks today. In the list of gainers, the first set of stocks that we'll look at, or the first stock rather, would be SBI Life from the insurance pack. In the last hour of the trading session, all of the insurance stocks, including SBI Life, HDFC Life, ICICI Pru, all of these stocks made a move higher, especially in the last hour if you look at the chart. The other stock that did quite well was Raymond. Remember, in the next couple of days, you'll actually see the listing of Raymond Life Sciences. Ahead of that, this particular stock up almost 5% today, one of the top gainers as far as the NSE 500 index was concerned. The other set of stocks, of course, that did very well was the shipbuilding. Ahead of the Defence Acquisition Council meet, whole host of these stocks, one of them being Masgao Dock, up almost 6%, but even Garden Reach, Cochin Shipyard, they too did very well in the session. One particular stock that did very well was Aadhar Housing. Kotak Institutional Equities initiated coverage on the stock with a buy rating, stock higher by 7%, and LIC Housing Finance today, especially in the last couple of hours, saw quite a bit of a rally. This was on back of the fact that analysts now believe ahead of Bajaj Housing Finance IPO, you will actually see a re-rating for some of these housing finance companies. But on the other hand, quite a few laggards as well. Signature Global, you saw a large block deal in that particular realty name. Stock ended low by over 5%. Eicher Motors in the last hour of the session saw quite a bit of a cool-off, some selling pressure, in the last hour. And lastly, the entire IT pack today, all of them cooled off a little bit from the recent highs. So names like Infosys, HCL Tech among the top drags as far as the Nifty was concerned.
All right, Vivek, thank you very much. So that's the stock-specific action that you had going on today in trade. Well, let's welcome in our guest. Jay Bala is with us, and so is Sudip Bandyopadhyay. Sudip, of course, is Group Chairman at Inditrade Capital. Jay, thanks for waiting. Good afternoon, both of you. I mean, for those who are just joining us, Jay, draw out the picture. First, Nifty bang because it finally had a bit of a move today. Is it going to last? Will it make up with what the Nifty is already doing? Will it catch on?
Yeah, I would leave the decision to the market, Prashant. But that startup the Nifty Bank is making, I would get bullish about 51,950 only, because the structure for the Nifty Bank is such that only ICICI Bank is participating in taking the index up, needs additional support from some other heavyweight. So far, that's not yet happened, and maybe it will happen. But I will not claim the market. But if it were to take out 51,960, I would anticipate fresh record highs somewhere close to 54,000. The key level for the Nifty is 24,770, but the Nifty is bumping up against weak seasonality of September. So as long as 24,770 is maintained, this weak seasonality may not affect this mainline index. But if it were to drop below 24,770, turn a bit cautious.
Okay, all right, got that. Stay on, Jay. We'll have more questions for you in just a bit. Let's quickly move on and talk about the big theme of the day. The sector of the day really had to be defense. Stocks were zooming around, whether it was airplane builders or ship builders, and this ahead of the Defense Acquisition Council meeting today. The council could be considering approvals for projects worth more than 1.2 lakh crore rupees. So that's a large number, and it was enough to keep the market excited. Upasna is joining in with more details. Upasna, tell us more.
Thanks so much for that. Well, defense stocks continue to rally today as Defense Acquisition Council's meeting is scheduled today for approval of projects worth more than 1.2 lakh crores. DAC is expected to approve issuing a tender worth 70,000 crores for building 7 warships. And the main contenders for the same are Masgao Dockyard and Garden Reach shipbuilders. Indian Army also plans over 50,000 crores projects to buy 1,700 combat vehicles. Now, HAL also continues to remain in focus as Cabinet Committee on Security has approved procurement of 240 aero engines from HAL. This contract is valued at over 26,000 crores and deliveries for the same will commence 1 year from now and is expected to be completed in the next 8 years. HAL also expects order inflow of 47,000 crores for FY25.
Okay, got it. Thank you very much, Upasna. So the buzz around big order inflows, that continues unabated around these stocks. Let's take the question to Sudip then. Sudip, hi, great to have you on the show. So the thing is, the stocks have cooled off a little bit. I mean, they've all rallied 200, 300, 400%. So from the top, there's now a small 20, 25% dip on many of these names. Would you be a buyer?
Well, I think the valuation still looks rich, I would say. The order wins are real, and these orders which we are talking about, Defense Acquisition Council, will definitely go ahead because it makes tremendous sense for India to manufacture in India. So some of these companies definitely will win these orders and their order books will further go up. But the fact remains that, execution of these orders and translating these orders into, the profit and loss account will take quite some time. So the valuation, the way it has already moved up, I think there is very little scope for further value appreciation, fundamentally, at least in the near term. If somebody is a long-term investor, I think, yes, Masgaon, Garden Reach, HAL, all are great buys, but then you are looking at a 5-year time horizon. Don't look at 6 months, 1 year, and try and buy this based on these orders. That would be my advice. Well, market today is, giving all kind of valuation to defense stocks, and I can't comment on that. But fundamentally, I think I'll be careful.
All right, you've got to give more time, basically. Jay, technically, how are all of them looking?
Yeah, it's slightly a diverse pack there. Garden Reach and Masgaon, in my opinion, might have a little bit downside in the short term, but they have an unfinished upside to record highs. That's the short-term outlook. But when it comes to Cochin Shipyard, probably it's topped out and probably it's going to underperform Masgaon and Garden Reach if my interpretation of what this chart is saying is correct.
Okay, all right, got that. So that's the defense space in sharp focus today. Let's move on then to a CNBC TV 18 exclusive. A large deal could be brewing in the chemicals space. Sources suggest that an Indian chemical company is now having global ambitions and could be looking at a large acquisition overseas. The company in question is Sudarshan Chemicals. Back to Vivek, who's been picking up some exclusive details on this. Vivek, tell us more.
Well, thank you so much for that. So, what we understand from our sources that in this particular chemical space, we're talking about the colorants as well as the pigment space. So, Sudarshan Chemicals, one of the largest players in this particular space, is actually looking at actively acquiring the assets of one of the companies called as Hubac GmbH. Hubac GmbH is a German company that had recently filed for bankruptcy. We understand that Sudarshan Chemicals has gone ahead and submitted a bid to go ahead and acquire the assets of Hubac. Now, we understand that, at this point of time, the creditors to Hubac are actually on board with this particular deal. Remember, just in April 2024, Hubac went and filed for bankruptcy. The main reason for the bankruptcy was the fact that they were unable to service the high debt, and also there was a failed attempt at debt restructuring. Now, the second part of this particular development is the fact that Sudarshan Chemicals, in case it emerges as the highest bidder and gets the assets, there is actually one company called as Hubac in India, whose parent company is actually Hubac, the global entity. In that particular case, there will be an open offer that will be triggered in Hubac Colorants, which is actually listed in India. Remember, this particular entity, came after Hubac, along with a private equity player, took over, the chemical assets of Clariant Chemicals some time ago in 2017. So it's a very interesting development. We reached out to Sudarshan Chemicals. At this point of time, what Sudarshan Chemicals told us was that they do actively keep scouting for inorganic acquisitions, but they didn't want to give any specific comment on this particular development. It's a developing story, and something that we'll keep track on in the days to come.
All right, Vivek, thank you very much. Sudip, any thoughts? This one, of course, will play out. It's an exclusive. But if you've tracked it, owned it at any point, we, by the way, spoke with the management of Sudarshan on this. But at that point, there was no bid or there was no talk of a bid. It was basically how, the bankruptcy perhaps could help Sudarshan sort of tap into some of their customer base. But your thoughts?
I think it's a very good move on part of Sudarshan Chemicals. This will give them global size and scale. And, this is a specialized area of operations. And, getting a hold of Hubac's assets, Hubac's clients, Hubac's business will definitely do very good for Sudarshan Chemicals in the future. The moment you are getting integrated into global supply chain, which Hubac was already integrated into, I think will take Sudarshan to a different league altogether. So I'm very positive. Hopefully this transaction will go through, and this is a win for India again.
All right. Okay, gentlemen. So that's the take on what seems to be brewing in deal land. Let's quickly move on and look at the next set of sort of news points and stocks that are on our radar. I think we can move on to some positive brokerage commentary that was lifting stocks today. And the stocks in question are GMR Power as well as Aadhar Housing Finance. Both of these stocks had a good run, both up between, as you can see, 5%, 7.5% on Aadhar Housing. This after brokerage notes came in with a positive commentary. In fact, we have our colleague Sudarshan joining in. Sudarshan flagged off these brokerage notes before the market opened in the morning. Fantastic pick, Sudarshan, because in all the commentary that you picked up these two stocks, these two notes, and bullseye. What a great move they've had. So just remind us, what exactly are the brokers saying about these companies?
That's correct. So on the back of positive brokerage note, both these stocks were sharply higher in today's trade. So Kotak Institutional Equities has initiated coverage on Aadhar Housing Finance with a buy call and target is rupees 550 per share. It says it's a large and affordable housing finance company with a long track record, and its multi-pronged expansion and appraisal strategy will drive 21% AUM CAGR over FY 24-27 with low credit costs and stable margins and improving leverage will accelerate ROEs back to high teens. BNK Securities has returned on GMR Power. It has initiated coverage with buy rating and target is 184 per share, implying upside of almost 40% from current levels. Talking about its capacity, BNK says it has installed power capacity that exceeds 3 gigawatt. It has 2 gas-based power plants and currently stranded due to gas supply shortages. Also, it has 3 operational highway projects totaling 730 lane kilometers, and triggers for the stock going forward can be energy assets consolidated by acquiring stakes in GMR Energy, thermal assets including Varora and Kamalganga. Also, it has successfully restructured balance sheet that has reduced debt burden and enhanced liability. And lastly, it has presence in smart metering with major contract in Uttar Pradesh valued at almost rupees 7,600. So these can be triggers for GMR Power going forward.
Got that. Sudip, thoughts on any of these? The names, GMR Power or Aadhar Housing?
Well, Prashant, Aadhar definitely is worth looking at. This is an affordable housing segment. And of course, with Bajaj Housing Finance IPO around the corner, there was expected to be excitement around pretty much all the housing finance companies. But Aadhar is different and it definitely merits attention. As far as GMR Power, it has been also in our list quite some time. I think they have cleaned up the balance sheet. To my mind, that's the most important thing. Of course, they have the power assets, they have the road assets, and these do augur well for the long term. And consolidation at some point of time with GMR Energy definitely will be in the cards. So all said and done, from a long-term investment point of view, GMR Power also does look good.
Okay, all right. Media exclusive. And there's potential relief for Infosys, which has been battling the 30,000 crore rupee GST notice. We learned from sources that the council is likely to clarify on this particular tax demand. For FMCG companies as well, there could be some relief on taxes which are imposed on snacks. Timsy, my colleague, is joining in with more details. Timsy, take it away.
Well, as you rightly said, the upcoming GST Council meeting, which is slated to meet on 9th of September, it is likely to consider provisions to give relief to Infosys. Remember, Infosys recently had got a pre-show cause notice from DGGI worth 32,000 crore rupees. After giving explanations, DGGI actually waived the first-year demand worth 2,000 crore rupees approximately for FY18. But yes, for the remaining period, that is between FY19 till FY23, 30,000 crore rupees worth of demand still stands, and Infosys has been saying that they want to come back seeking more time to DGGI on this. I'm learning that sources are saying that there could be a potential relief. Apart from that, an upcoming council meeting is also going to give relief and consider provisions for data hosting players such as Amazon, Google, Meta, etc. Council is likely to clarify on issues pertaining to service providers of software, cloud computing, data hosting, etc. There could be a possible clarity via circulars on treatment of place of supply, what should be treated as export of services in this case, GST rate treatment when recipient is abroad, and all of this is likely to be there in the detailed circulars. Apart from that, as you mentioned, FMCG companies are also likely to get a relief in the upcoming GST Council meeting. Council-nominated Fitment Committee is likely to have recommended for the Council's deliberations that when it comes to snacks such as fryams, etc., which are prepared via extrusion process, there the rate should be charged as 12%, but prospectively. In the past, that rate will be 18%. Remember, currently the rate that is levied on snacks such as bhujia, namkeen, etc., that is 12%, but on the snacks which are prepared via extrusion process such as fryams, etc., where we see PepsiCo has a product called Cheetos, 2Yum, then there are many other snacks which are sold by ITC, Haldirams, etc. There were GST authorities who had sent notices to these companies seeking 18% GST, and that stands for the past liability. But for future, this will be clarified, and they will get parity as par with Namkeen. Back to you.
Okay, all right, Timsy, definitely snacks are serious business, and that while, you know, we might talk about the taste, I think the tax is what has been playing on companies' minds. So it'll be really interesting to note what is the approach the GST Council takes. Thank you very much for that story as well. We'll take a break, come back on the other side, and we'll, of course, be in the last leg. We'll talk about the top corporate voices that we interacted with today and get you the top events to watch tomorrow.
Okay, welcome back. This is Markets Forward. Let's get you a sampling of the corporates that we had on the program today from the morning. So Keynes Technology is the first one that we're going to get to you. The company's received government approval to set up a semiconductor assembly, testing and packaging unit in Gujarat. The project will involve a capital investment of 3,300 crores and peak revenues once this is up and running and it's 100% utilized. I mean, the peak revenue would be 4,000 crores, according to the Keynes management. And the companies told us that they expect margins from this business to be sort of better than what they are making right now, which is around in the 50-odd% range, which should boost their overall margin profile going forward.
We also caught up with PNB Housing. The management sees net interest margins at 3.5% for the next 3 quarters. The management also adds that the company is aiming for the retail book to grow to 1 lakh crore rupees by FY27. So retail is the big focus for PNB Housing. They're expecting, of course, better benefits to accrue from the PMAY Yojana, the second one that has been announced just recently.
Okay, well, Bajaj Auto was the other one that we had in the program. They told us that they've sold 5,000 units of the Freedom 125 CNG bike, which was sort of unveiled recently. They're expecting this number to double next month. And they said that they have orders for 12 to 13,000 of these bikes, which have with the bookings and payment, which has already sort of come through and delivery is pending. They added that they've covered 33% of what they call the addressable market for these bikes, which will go up to 80% coverage soon.
Premier Energies made a strong debut on the bourses today, with shares almost doubling from the issue price. The management sees revenue doubling in the current year, that's FY25, versus the last financial year on the back of capacity expansion. The company also says that the order book stands at 5,900 crore rupees and the pipeline ahead is looking quite strong, with bids to the tune of 4,000 crores. The company is planning to improve its margins going ahead. Okay, so that was all the corporate commentary that we gathered today. Before we wrap, let's bring you the key events to watch. Tomorrow, Vamakshi is standing by with the details. Vamakshi, over to you.
Well, absolutely. When we look at tomorrow, it's going to be an eventful day. Let me first start off with the economic cues to track. First up, India will be reporting the services PMI data. Apart from that, US trade balance data is expected to come through tomorrow, and UK will be reporting composite as well as services PMI data. The European Union's PPI data for the month of July is also expected to come through tomorrow. But apart from that, there's a lot of stocks to watch out for. Segachi Industries and KEI Industries will be in focus. AGM is scheduled tomorrow for both of these counters. TCI, it happens to be the ex-buyback date for this company, so watch out for that. And Adani Enterprises will also be in focus, and that is because the company will be launching 800 crore NCD issue. Apart from that, Ecos Mobility will be another stock that we will be watching out for, and that is because it is expected to make its debut on the bourses tomorrow, and remember that it was subscribed nearly 64 times. Apart from that, Gala Precision Engineering IPO, the subscription closes for this one tomorrow, and Bazaar Style Retail IPO, the IPO allotment will be finalized tomorrow. So, of course, there's a lot to watch out for in the trading session tomorrow.
All right, Vamakshi, thank you very much for that. So that's a bunch of things which have been focused as we return. Well, it's a wrap on this edition of Markets Forward from all of us here. Goodbye. Thanks for watching. Programming continues with news and updates in just a bit.